Calculating business finance, some questions. So you've now looked at obviously the topics of the statement of financial position and the statement of comprehensive income, and you should hopefully know all about what these mean. If you don't, check out the videos that I produced on this topic. However, here are some questions to test your knowledge and understanding. Make sure you pause the video after each question so that you can obviously then write down the answers, and then once you've got the answers, check the answers with the workings I'll show you afterwards. So question 1. What is the formula to calculate gross profit? Okay, that's a nice simple one. You should have got revenue minus cost of sales. Remember, you need to understand that. Remember, revenue is money going in, and the cost of sales is the cost to make the product or the service. Question 2. What is the formula to calculate net profit? Okay, a nice simple one there is gross profit minus expenditure. Remember, this is the gross profit you've calculated previously. Take away all the other expenditure the business might have. Okay, let's move on to question 3. Here we have a statement of comprehensive income. Complete the statement below using the information that's been provided. You should fill in the areas which are shaded in yellow. If you need some hints, then carry on watching the video. Otherwise, pause the video while you undertake that task. Okay, so there is hint number 1. I filled in the gross and the net profit boxes for you. So now you know that you need to just fill in those other sections. So the things that make up gross profit and the things that make up net profit, and then do the calculations. If you're still struggling, then keep watching the video. Otherwise, pause the video now while I complete the task. So here you go now with the labels all put into the statement of comprehensive income. All you now have to do is actually fill in the yellow boxes to be able to calculate the missing figures. At this point now, pause the video while you do that, and then I'm going to unpause it to show you the answers. So hopefully you managed to calculate these answers. Remember, you just simply had to put your sales revenue in, which is 80,000, your cost of sales at 20,000. You do your revenue minus your cost of sales, so your gross profit of 60,000, and then you've got your other expenditure such as your rent of 10,000, your salaries of 80,000, and your utilities at 14,000. Add all those up together to give you 42,000, and then remember the formula. Net profit is your gross profit, take away all the other expenses, so 60 take away 42 is £18,000. Okay, task 4, we're going to move on to assets. So which of the following would be assets for a business? I'm hoping that you identified that assets are items that a business owns, and as a result of that, the car, trade receivable, so money you're due in, cash in the bank, machinery, and inventory or stock. They are all things that the business would own. So now we move on to the opposite of an asset, a liability. Which of the following would be liabilities for a business? So I'm assuming that you've managed to identify the trade payable, so people who we owe money to, who've given us credit, rent to our landlord, who we have to pay, and the bank loan. They would all be liabilities, so things we owe. So remember, assets are things we own, liabilities are things we owe. So we now move on to current assets. Which of the following would be categorised as current assets for a business? Hopefully you've been able to identify cash in bank, inventory, and trade receivables. The reason for this is because remember, a current asset is something that we can turn into cash and use within a year. So cash in the bank is obviously the best one. Stock we can sell quickly if we have a sale, for example, and turn into cash. And trade receivables are people we've given credit to, who hopefully we are due to get paid within a set period, under a year of course. Okay, task 7. Let's look at non-current assets. So which of the following would be an example of a non-current asset? I'm hoping that you spotted that it would be the car and the machinery, because these are things that we own but take longer than a year to turn into cash. So it would take longer than a year to turn the car or machinery into cash in the world of accountancy. Task 8. Let's look at current liabilities. So which of the following would be current liabilities for a business? I'm hoping that you spotted that it's the trade payables and the rent to landlord, because the rent will probably be due in a month's time and the trade payables probably is going to be due within less than a year's time. So that's the same rule again. Current liabilities are debts that we have to repay within a year. Notice the bank loan is not included because that would be a non-current liability, because it will be typically over a longer period of time that it have to be repaid. Okay, question 9. So we're now moving into profit margins. Calculate the gross and net profit margins for B using the data that's been provided below. So you've got the gross and the net profit margin formulas below, and you've got the data of the table. Calculate those margins. So I'm hoping that you've managed to calculate 75% would be the gross profit margin and 22.5% would be the net profit margin. So what does that tell us? Well, it tells us that they're making 75% on every product that they sell. And when they take away all their other costs, they're only making 22.5% on the profit that they get after the business has taken away all its costs. Why does that matter? Well, we look at the difference and the comparative difference between the two. And there's quite a big difference between those two numbers. So that may suggest that they've got a large amount of expenditure. And maybe that's why they'd look to try and cut back if they wanted to increase their profit margin. So, question 10. We're going to look at liquidity ratios. So, calculate the current ratio and the liquid capital ratio using the information below. The formula for the current ratio is your current assets divided by your current liabilities, and the formula for your liquid capital ratio is going to be your current assets, take away your inventory, and then divided by your current liabilities. So hopefully you've calculated that these ratios are always expressed to 1. So they'll have 2.4 to 1 for the current ratio. In other words, they've got £2.40 in current assets to every £1 of current liability. So every £1 of debt that they've got in the short term. And on their liquid capital ratio, they've got 1.6 to 1 or £1.60 to every £1 of debt they've got in the short term as well. These are all ratios which are useful for assessing is a business able to pay and meet its current obligations. Clearly, if it's got more than that £1, then yes, it is, because that's expressing it to a ratio. Okay, question 11 and our final one. Here is the most tricky question, and I'll say it to last. There you've got a statement of financial position. Complete the statement of financial position. You will see the yellow sections require you to fill it in. If you can do this now, pause the video, or if you're unsure, keep watching while I give you a hint. So, the hint I'm going to give you is the formula to calculate the net current assets and the total assets less current liabilities. So your net current assets is calculated by doing your current assets minus your current liabilities. And your total assets less your current liabilities can be worked out by getting your fixed assets and adding them to the net current assets that you would have just calculated. Of course, you probably got two blanks that you need to fill there on the fixed assets and on the current assets. Those ones, remember, on the right hand side are always totals. Remember, totals go on to the right hand side. Just complete that and I'll show you the answer. So here you can see the answer you should have got. So the car and the machinery come together to give you £30,000. You add your inventory, your trade receivables and your cash in your bank and you get £33,000. You've got your trade payables, which is a liability at $4,500. Remember, your net current assets is your current assets minus your current liabilities, which leaves you with £28,500. Remember, to get your total assets, you take your fixed assets of $30,000 up the top there, and you add it onto your net current assets, and you get £58,500. Remember, that figure always balances with the amount of money that goes into the business. However, that's not being required in this question. Hopefully you found those questions useful. They're a good test of your knowledge and understanding. Remember, if you have found any of these tricky, I have got an extensive collection of resources which you can find on my website and on my YouTube channel, which will be able to test your knowledge and develop your knowledge on these areas. Don't forget to give it a like, share and follow. And remember to keep buzzing.